Hello, how are we doing? Welcome to the weekly open stream. We're going to focus on Bitcoin today, but generally speaking, we will look at Bitcoin hype and Ethereum. This stream is brought to you in partnership with bitmex.com. So if you remember, if you've been around long enough, the most legendary exchange, centralized exchange in crypto is BitMEX, the infamous, owned by the infamous Arthur Hayes. We all traded there. I still trade there. I've not stopped trading there for 8 years, 9 years. 9 years, blimey, yeah, time flies. And yeah, so we've decided to work together and bring you a stream every Monday and Friday. So if you want to check out BitMEX, head to bitmex.com. 2.1 million traders, 95% of your funds are in cold storage, 11 years, zero funds lost. They've never been hacked, never lost any money. If you remember in the old days, it used to take 24 hours to get your money out, which is a good thing, right? It was annoying if you were, you lived on your money because you wanted to go out, but you couldn't, you had to wait 24 hours. However, it made sure that we all still had a portfolio in the morning. And if you remember, here's a bit of a flashback for you, nostalgia, the old UI. So, this will give you a bit of a throwback. Dark Classic, do you remember? It was amazing, wasn't it? Did they have White Classic? They should do. Light Classic too. Yeah, there we go. Yeah, you remember that? And they used to have all the price, all the assets up here. Good times. Anyway, so this is BitMEX. Check it out. I always recommend you to use a decentralized exchange. There actually isn't one. I know people talk about Hyperliquid. I don't know of one that is completely decentralized today. Secondary from decentralized, look for the ones with track record of protecting your funds. BitMEX is the top of that list of the CEXs. So, Bitcoin. Now, let's begin. Um, so, we're going to take a look at the monthly because it's coming up to the end of the month. I apologize for my croaky voice today. I've got the aircon on all day. I'm in Asia, it's hot. I didn't realize how croaky I sounded until I started streaming. Anyway, these streams are going to be quick today on Mondays, just to give you a brief overview of what we're looking to trade this week. Okay, so generally speaking, we go top down macro, weekly, monthly, weekly, daily, lower time frames to look for our trades. Okay, so let's clean up this. Let's start with a clean chart. Let's start with the clean chart. So the monthly. How's the monthly looking? So we didn't take out the previous monthly low. Okay, but what we did do is we have pushed higher from the open. Okay, so let's mark the monthly open. Now, I don't know. Oh, here it is. Here's my bar. Just need to remember the hotkeys. Right, there's the. Let's go monthly open. Okay, that's good enough for me. Text. I changed my chart color from black and white, as many of you will remember. 10 years black and white. I decided to come away from it, but you know, it looks much better now. Better for my eyes. So there's the monthly open. So weekly. So it looks strong. It's taken out the previous monthly high. So let me just mark that. Previous monthly high. Because it could be a top. These have a tendency. Now, here's what's important. On a downtrend, okay, look for the market to take out a key high. Key high being a weekly open, sorry, a previous weekly high, previous monthly high, previous daily high. Okay, so they're the key highs. So if you're day trading and you come out of the gate in Tokyo and it just sweeps the previous daily high, you're likely to be looking to, or you're likely going to get a lot of action shorting that into the next area of liquidity, which would be directly into the previous daily low. Now, it's the same concept generally speaking, and listen, this is not perfect. Nothing is. Um, but what you want to see on an uptrend is the same as what you want to see on a downtrend. So let me give you just a brief idea. What you want to see is a key low. Let's change the color of that. You want to see a key low get taken out. That's good enough for me? Key low get taken out. Okay, bang, there, moves up. Key low. Yeah, and once you get that, it gives you confidence that the market is going to move in the opposite direction. Now you can keep going up and keep doing these, but once you do get that and you get that close, okay, you start going, right, I'm going to look for, okay, it's the same on the way down. Now, bear in mind, many of them are easier in hindsight. However, what it can do is it can give you, in the moment, a risk adjusted position. So you know where you're wrong. You don't know if you're right until the market moves. For example, as soon as that swept this high, the right idea would have been to head short. Okay, I didn't get short until like 108, which is here, about here, which I fucking lost 20,000 per coin. But that's okay. You know, you can't, it's not perfect. But the point is, look for the sweep. Okay? Look for the sweep. Now, is that going to give us a drop on the next monthly, which takes out these three lows? Right, that could be. Now, when we make a plan, we don't know what's going to happen next month. But if we have in our mind both options, it could do this, it could do that. Now, that's very different from could go up, could go down. I'm saying open your mind to the possibility of how will I react if the market begins trending down in May. And if you've already made the plan and it's already imprinted in your mind because you've been looking at through the charts, no matter how bullish you might be, you're going to react in a more calm manner, and you're definitely going to make more money. Whereas if you don't make any plans and you're very you have tunnel vision that, right, we're going to go up and I'm going to long only, and then when it comes time to react to the short side, you spaffy pants, right? Shit yourself, like, well, this shouldn't be happening. Market is a scam. Then you're going to lose all your money. Okay, so if you make both plans in your head, you'll be prepared for both outcomes. Right now, of course, we all have a bias. So it's impossible for us to get rid of a bias, and I prefer Bitcoin to go up. However, we don't always get what we want in life. So let's just mark, and it favors the downside because look, broke structure. Okay, what have we got there? We broke structure, swept the high, we're on a downtrend. Okay, now let's put a previous month, previous monthly high. I'm trying not to keep you too long, guys. Let's go. I'll do okay. Weekly. So that's the previous monthly high. We've swept that nicely now. So let's label that previous monthly high. Last week's high. Let's just change it to last month's high. Okay. Weekly. I mean, 4 strong weeklies, but that sweep there might have been. That might be the high. Okay. Now we could be coming out of a war, but we have to just focus on the price action. Now, is there anything for me there other than marking the weekly open? I don't think there is. So let's mark the weekly open because we're up on the open. Now, a drop below the open gives you your trap, okay, and you can short it with fairly strong confidence. But yeah, I mean, just drop as I begin to drop this lower. You start looking and going, okay, now I do have. Now I do have what resembles a. There we go, trap. Okay, which is the market pushed up, broke out, failed to break out. We call this a failure pattern. You'll have heard it called in 20 different names: deviation, failure pattern, um, trap. It doesn't matter, but the principle is still the same. Key high, break above, close, immediately close back below, react. So essentially, right, if you were a higher time frame trader, which I'm not, you could and you would right now look to go short, daily high. I don't know where your target would be, right? But the point would be you would have been you'd be happy with what you've seen on a higher time frame. It would give you reason to enter the market, and you don't need to check this daily. You check this weekly. These type of positions, okay? Now, I'm not that type of trader, so I don't open a position on a daily. Sometimes, right now, let's have a look at what we've got. So let's bring in the session breaks. 1, 2, 3, 4, 5, 6, 7. So Monday, happy days. Tuesday, Wednesday, happy days. Oh, happy days. Why didn't it link? Why is it not working? There we go. Why is it not working? Oh, there we are. So there is our previous Monday high. Previous Monday high last week. So Monday high there. Okay, so there's Monday high. Other than that, I don't really have anything. That is pretty much all I have. Now, let's bring in the weekly range, because that might give something a little bit of a better idea of what we're looking at. Okay, so Monday range. There, okay, so there's your high. Previous high. Previous weekly high. Previous weekly low. Mid-range. So we're currently, bounced about the mid-range. We're currently just above the mid-range. Now, this is how I work. If we are above this grey line, okay? If we're above this on a Tuesday, I long into the high, okay? Because weekly I target one. I have one target every week. Previous weekly high, previous weekly low. Now my probability is increased depending where I'm located on a Tuesday. Okay, look, we've swept this high now. If we break down here, I'll probably go short. Okay, below the green, which is Monday high, back in Monday range. That gives a second failure pan. Okay, but if we break below here, the confidence or probability on your trade increases significantly because you're then in the lower band of the weekly range. So you look for the low, okay? And obviously everything in line with that gives you confidence in your trade. So if we do get the drop below the green back in there, my trade will be this. Short, somewhere in there, tight. Wrong, today's high. Short, down here. Thank you very much for joining. See you on Friday. Goodbye.